China has just betrayed Trump, and Boeing may never recover from the blow. The Bank of China has officially canceled all aircraft orders from Boeing, one of America's largest and most vital companies. Instead, China signed a massive contract to purchase 500 planes from French manufacturer Airbus. This is not just a business decision, it's a political signal, and it came at the worst possible moment, right as President Trump is trying to restore peaceful relations with Chinese leader Xi Jinping. But make no mistake, this is China's response to Trump's trade war. The tariffs imposed on Chinese goods were supposed to bring jobs back to the United States, but China is making it clear it has other options, and it just used them on the most public stage possible. For Boeing, this is the most painful loss in its history. For America, it's a serious warning. China is no longer afraid to sever ties. While Airbus celebrates a major victory, American companies like Apple, Tesla, and US Steel are still trying to build new factories at home. They promised to shift production out of China, but progress has been slow and painful. Labor is expensive, construction is delayed, and problems keep piling up. Even Republicans in Congress are losing faith in America's ability to revive its industrial base. And more signs are emerging that US companies simply won't be able to deliver on their promises to bring jobs back. It's too costly and too complicated. Meanwhile, China continues to move forward. So let's break it down. Donald Trump believed that high tariffs would force China to make concessions. He thought a 145% tax on Chinese goods would scare Beijing, but the opposite happened. Instead of backing down, China quietly began retaliating by pulling its money out of the American economy. This isn't just about goods. It's a fight over money, influence, and long-term strategic positioning. China is saying no not only to American products, but also to American bonds, meaning it is pulling out of the most important part of the US financial system. And it's doing so deliberately, as part of a carefully calculated counter-strategy. While Trump is trying to strike a deal with Xi Jinping, China suddenly announced it would no longer purchase Boeing aircraft. This was Beijing's first major strike in a long time, and it came precisely when Trump was counting on a breakthrough. But China made one thing clear: smiles and photo ops are not enough. Boeing is not just any company. It is the largest American exporter and a symbol of US industrial power. For years, China was Boeing's biggest customer. In 2017, it purchased 1/4 of all aircraft the company produced. But then came the trade war, the safety crisis surrounding the 737 MAX, and worsening political tensions. In 2023, Boeing delivered only one plane to China, compared to more than 190 in previous years. It looked like things were finally improving. China had approved the MAX for delivery, and the first aircraft arrived in June. But suddenly, China announced it would stop buying Boeing jets and turn entirely to Airbus. And this isn't just bad news for top executives. Boeing employs more than 140,000 people across the country. Its factories in Washington, South Carolina, and Kansas support entire towns, including suppliers, contractors, and airport workers. We're talking about hundreds of thousands of American jobs that depend on Boeing. China's aviation market is expected to purchase over 8,000 aircraft by 2040. If Boeing loses that market, the losses could reach into the trillions of dollars. That's money that will no longer flow into American factories or workers' pockets. If China freezes purchases for the long term, there will be layoffs, production cuts, and a crisis in one of the United States' most strategic industries. While Boeing struggles to survive, European aerospace giant Airbus is soaring. The upcoming deal sparked a wave of investor enthusiasm. Airbus shares jumped nearly 4% on the day of the announcement and rose 6% over 3 days. Meanwhile, Boeing shares dipped about 1%. The market got the message loud and clear. China is punishing Boeing and throwing open the door for its European competitor. Reports are emerging that Chinese authorities are preparing a massive aircraft order ahead of an upcoming visit by a European delegation to Beijing. While the exact date remains unknown, rumors suggest a deal for up to 500 jets, mainly A320s and A350s. This isn't just a big contract, it's a deliberate and strategic reallocation of economic priorities. For context, Airbus already holds a strong position in China, with more than 1,100 of its aircraft in operation with Chinese airlines. Boeing has around 600. Even more telling is the order book. Airbus has over 500 pending orders from China, while Boeing has only about 160. China isn't just shifting course, it's stepping on the gas. If this continues, Boeing could lose the Chinese market entirely. And this is a signal to every American company doing business with China. If negotiations break down, your access to our market may be over. Apple, Tesla, Ford, GM, they all rely heavily on China. At any moment, Beijing could raise tariffs, delay approvals, or simply dampen consumer demand for American brands. These companies can't just pack up and leave China. It's too important, too profitable, and too deeply embedded in their supply chains. So can they ever truly exit the Chinese market? The answer may surprise you. Bringing manufacturing jobs back home was one of Trump's signature promises. It sounds noble, patriotic, perfect for campaign rallies and cable news headlines. But behind this polished rhetoric lies a harsh and frankly uncomfortable truth. These declarations are not an actual industrial revival plan, they're a carefully staged performance. It's strategic cover that lets companies avoid public criticism while continuing to manufacture everything abroad. Companies aren't investing in American workers, they're investing in PR and profit. Shifting production to the United States is incredibly expensive. Wages are higher, regulations are stricter, and land, energy, and compliance costs are sky high. It's far easier and cheaper to keep factories in China, India, Vietnam, or Mexico, where labor is a fraction of the cost and government oversight is, to put it mildly, symbolic. As of 2025, the average industrial wage in China is around $1,100 per month. In the United States, it's nearly $6,000, not including insurance, benefits, and union protections. Labor costs alone make American manufacturing 6 to 8 times more expensive. On top of that, China heavily subsidizes its industry, from electricity and land to raw materials. This allows companies to operate on razor-thin margins, but at massive scale. In the electric vehicle sector alone, China has invested over $230 billion. Add to that the fact that the United States enforces far stricter environmental, labor, and technical standards, which come with heavy bureaucratic overhead. In China, those rules are often simply ignored. And then there's scale. Chinese cities like Shenzhen are built specifically for high-volume electronics production. All suppliers, logistics, and assembly are located in one district. In the United States, things are different. Logistics are scattered, labor is expensive, zoning takes ages, and corporate taxes are higher. But wait, didn't Apple promise to bring manufacturing back to America? That's what the headline said, at least. But as always, the devil is in the details. To understand what's really going on, we have to go back a bit. In 2012, under public and government pressure, Apple CEO Tim Cook made a big announcement. The company would begin assembling certain Mac models in the United States. It was hailed as a historic moment, as if the tech giant was choosing country over profit. But in reality, nothing much changed. No iPhones, no iPads, no large-scale return of manufacturing. Apple did just enough to make headlines, and not an inch more. That's why Trump is angry at Apple today. Instead of choosing the US, their production is shifting to India. Now, with Trump once again threatening tariffs and penalties, Apple has returned to talking about coming home. Official press releases are full of glowing language about investing in America and celebrating American innovation. But in practice, billions of dollars are flowing into India. The company is promising to invest $500 billion in US iPhone production, but Trump no longer believes them. He's now refusing to offer Apple any tariff exemptions. This isn't a return of manufacturing, it's just a change of route. Labor is cheaper in India, the political climate is more stable, and all of it is safely removed from the rising tension between Washington and Beijing. The decision was deliberate. The motive, of course, is profit. If even Apple doesn't want to build factories in America, why do people think struggling automakers or textile brands will? Just look at Ford or General Motors. These giants loudly proclaim their loyalty to American workers, but they continue buying batteries and parts from China, or even move entire production lines to Mexico. Nike, Levi's, and many other consumer brands follow the same playbook. They talk about reshoring, but still manufacture in Vietnam, Bangladesh, or Cambodia, where wages are tiny and environmental standards barely exist. These companies know that relocating production to the US would dramatically raise costs and, in turn, prices. American consumers, used to cheap goods, won't pay $1,200 for an iPhone or $150 for Levi's jeans, and that would hit profits. And for top executives, there's nothing worse than disappointing Wall Street. So here's the question no one wants to ask. Is it even possible to have it both ways? If you take a closer look at what's happening in Congress, the picture looks very different from the speeches. Those who talk the loudest about bringing jobs back are often the same ones rejecting laws that could actually make it happen. A perfect example is the American Competitiveness Act. It was originally designed to ensure that companies would receive government support only if they built factories in the US. But by the time it passed, the law had been watered down significantly. Now, corporations receive tax breaks even if they build factories overseas. That means they can keep offshoring jobs and still get money from American taxpayers. It raises the obvious question: was anyone ever serious about bringing manufacturing back? These aren't just technical tweaks, they're a signal. Many lawmakers no longer believe in the idea of rebuilding American industry. Instead of investing in modern plants, vocational training, and local supply chains, they're doubling down on the same old tune: lower taxes, fewer regulations. It sounds appealing, but in practice, these policies create almost no new jobs. In fact, they make it easier to move production abroad, and the numbers speak for themselves. In 2025, fewer companies actually brought production back to the US than in previous years. And this is despite record corporate profits and more expensive imports due to tariffs. Even with favorable conditions, businesses aren't eager to build in America. The Trump administration keeps insisting that China needs access to the US market, but that version of reality is growing outdated. In just 1 year, US exports to China dropped sharply. Beijing is moving away from its dependency on American goods. Chinese companies have learned to survive by diversifying and leaning into domestic consumption. Today, only 15% of Chinese public company revenues come from overseas markets, and the US share is just 2 to 3%. That's why Chinese stocks remain stable, even as exports to the US shrink. The true engine of China's growth is no longer the American shopper. It's the expanding Chinese middle class. But while China may be able to walk away, can America? The numbers are shocking. In April 2025 alone, US exports to China fell 21%. Chinese exports to the US collapsed 77% compared to March. This isn't a slowdown, it's a collapse. Tariffs cut both ways, and Beijing hit back with triple-digit tariffs on key American goods. US exporters, especially in agriculture, tech, and heavy industry, are now on the edge of survival. According to maritime shipping data, US container exports have plummeted by 78%, down to a mere 57,000 units. Buyers aren't turning away because of politics. They're leaving because America is no longer the cheapest, the fastest, or the most essential. So here's the real question: what happens when the world no longer needs American goods? Subscribe to the channel to stay updated on all developments in the global economy. Thanks for watching, and see you in the next video.